Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 17th of October, starting on with the FTSE 100, which is enjoying the way the 200-day line is rising, the black line there around 76.40, 50-day line also rising, so that potentially means, although it sounds like madness, that we're heading into a golden cross over the next 2 or 3 weeks, but obviously it's early days yet. The other good point at the moment is that we've had an RSI bounce above neutral 50, and that makes the current consolidation either side of the 200-day line look like a mid-move consolidation. A break of the 76, 80, 90 area could take us up to the top of that rising trend channel from back in August at 78.50 plus. Hopefully over the next 2 or 3 weeks it would also break a line of resistance from February, which has rather ruined this market for the bulk of the year. On the downside, below 75.80, the risk of a test of the 50-day line around 75.10. Moving along to the DAX, and here the position is that bounced off the floor of that falling May trend channel, 15,100. Above that, looking for a retest of a recent resistance around 15,500, 15,600, and the 50 and 200-day lines just above that. If we break back below 15,000, I suppose the next level down, 14,800. But at the moment, it looks like we've been let off the hook. The Dow is next, and here you can see that we managed to spend yesterday at and above the 200-day line, 33,800. Initial target here, the 50-day line, 34,300, and then hoping maybe as soon as the end of this month for 35,000 and August-September resistance on this market. Below the 200-day line, the worst we expect is 33,000, and hopefully it wouldn't even be lower than 33,500 recent support. Moving on to the situation of Bitcoin, which is surprisingly rather better than it has been for a while. We had the big spike yesterday towards 30,000. The key here now is that we hold at or above the 200-day line, 28,000. If we can do that, then we're looking for more spikes towards the 34,000 rising trend channel top from the beginning of the year, maybe over the next 2 to 4 weeks. Downside hopefully limited to 26,600 and the uptrend line there from back in January. The whole thing backed by an uptrend line in the RSI window where there has been bullish divergence after that bear trap in the middle of September. Just want to have a quick look at gold and crude. So here we've got gold bouncing, bear trap gap reversal bouncing, obviously in the wake of the Middle Eastern crisis. Here we're now at the top of the falling trend channel from back in March and above the 200-day line around 1940. That would suggest that we're going to have another attempt on the $2,000 area, which was post-July resistance for this market. But obviously, as we know historically, 2,000 tends to be the best that this market can manage. The key here is staying above that 50-day line, 1925. On to crude, and here the situation mirroring what we've seen at gold, and obviously with the geopolitical issues, we've had the bounce after actually an overshoot to the downside within that rising trend channel from back in May, above the 50-day line at around $85, looking for a full or even partial retest of last month's resistance towards $95. But the fact that both the 50 and 200-day lines are rising, it means that crude is very much on the front foot at the moment. Moving along to the stocks, so not a big selection today. Interesting that we've had the rug pull on Avacta. Obviously some of the bears rather upset that the shares got into the 160s and actually had a breakout through the old April resistance. I'm not surprised that there was a rug pull, and I'm sure there'll be many more of those, but the key here is obviously the way that the shares have built that saucer-shaped base over much of 2023, and that is unlikely to break. In fact, we bounced off an uptrend line, which is, I suppose, the base of the saucer at the moment. Today's low, 127. Wouldn't expect that to be broken, and I would actually expect the shares to retest the best levels of the early part of October through 165 by the end of this month. Moving along to Capital Metals, which has been another certainly has been a hero in the recent past. Beautiful consolidation there over the last few days at and above that November resistance line around 3.9 pence. I was suggesting that above that we could hit up to 7 pence, and that the way things are going, that could happen by the end of this month rather than the end of next month. We've got the 50 and 200 day lines both rising as well, and even though there may be the odd rug pull here, the pattern here of recovery looks very strong indeed. On to Destiny Pharma, which has given quite a sort of choppy ride in the recent past, but the shares have gapped up through a rising 50-day line, which tends to be a very good signal, or reliable signal, let's say. Top of the channel there from back in February, as high as 68 pence, and we're looking for that by the end of this month, so that gives the shares around 2 weeks to meet their destiny. Moving along to Moneysupermarket, which I don't think I've looked at here for ages, perhaps even years. The situation here is that had a break of neckline resistance from July around the £2.53 level, and that gives a nice sort of level to trade against. The 200-day line rising as well quite sharply. Ideally, we close above 255 today, which is post-August resistance, and head up to as high as 300 pence, maybe as soon as the end of next month. Not quite sure what would drive the share so high, but that is the charting situation. Moving along to Poolbeg, which had great news today, and unfilled gap to the upside through the now rising 50-day moving average at 7.3 pence. The longer we stay above that, the more confident that we would be that the shares would head to the top of that rising trend channel from the beginning of the year, perhaps as soon as the end of next month. I suppose the barrier at the moment is to get through the 200-day line, which has or was resistance back in August. That's around the 8 pence level. Moving on to Pan-African, and here, interesting situation. The shares just trying to break that line of resistance from back in May. That's running around the 15 pence level, 15.5 pence level. End of day close at current levels or above, and we could be opening up to a move to 22 pence by the end of next month, which is the top of a rising trend channel from November last year. The more time we spend above 15 pence and recent support, the better for the stock. Red Rock Resources is next, and surprisingly strong in the sense that we had the spike yesterday to the top of that falling wedge, 0.19. The shares have bounced back after a little bear trap below the 50-day line. Still looking with the shares basically to break that 0.19 level on an end-of-day close basis. If they can do that, could be up to 0.31 by the end of next month. Again, another situation which seems slightly unlikely, but that is what the charting is saying, especially when you add in the bullish divergence line, which has been in place since back in June. Lower lows for October, but a higher RSI trace there. Serabi I've covered a few times in the recent past, and given the lack of that many bullish situations, here it is again. Initial target here up to 37 pence, above that on an end of day close basis. Looking for a best case scenario target above 42 pence. And that might happen by the end of this month, given that we had an unfilled gap to the upside to start this week. Amazing that people keep buying shoes. You would have thought they'd be doing other things with their life, but Shoezone doing very well at the moment with the bounce, a higher low for October versus May, and then the gap higher today. I'd like to see an end-of-day close through £2.35 and the 200-day moving average to give us a target as high as £2.70 by the end of next month, given the apparent shoe mania that people have at the moment. Touchstone expiration is next. I haven't covered this for a while. Obviously, there was a rug pull in Avacta style from the August peak, and current situation is we've got a bear trap gap reversal. In fact, it's a one-day island reversal, so we gapped down on Friday and have gapped up today, so that's a very rare and special setup, and that suggests that the bottom is in place and above the old support there from June to 56 pence. Looking for the shares to meet the 50-day line in the upper 60s over the next 2 to 3 weeks. One of the most horrible charts to chart or look at is THG. It was very, very random type of price action here, but we've had a key reversal to the upside, which is also a bear trap below the old 64 pence September support. So that might be significant from a charting perspective. Initial resistance here at 77, and maybe the shares can fill that gap down that we had last month up to 86 pence over the next 2 weeks, perhaps by the end of this month. But I'd like to see them above or remain above 68 pence and that September resistance line. On to the last two, and the first one is Upland Resources, which is consolidating just above the old rising trend channel, that level there around 2.9 pence. Like to see the shares remain above 2.9 pence ahead of a potential move up to 4.5 pence, hopefully by the end of next month. Finishing off with ValiRx, which was a recent charting winner, let's say. That was just at the turn of the month. We saw the shares break out of that falling wedge. Nice consolidation above the 200-day line, currently at around 9 pence. And the longer we remain above that, the greater the chance of a retest of not only this month's resistance around 14.75, but up to 17 pence by the end of next month. In fact, the more time spent above that old target around 10 pence, the better for the shares. That's it from me today. More updates tomorrow.